In this presentation, we'll give an overview of the reports within the accounting system. Let's get set up with Sage 50 Cloud Accounting. Here we are in our Sage 50 mock file, which is the Bellwether Garden Supply. We're in the actual software, but you should be able to follow along with the demo software as well, the free demo version. So we're going to be going to the reports now. So I'm currently in the customers and sales. The reports can be found in the reports and forms drop down. We have the standard reports up top, or the categories that you could go directly into, including the accounts receivable, accounts payable, payroll, general ledger, financial statements, inventory, and so on. The financial statements are going to be here, and note that when you go into the reports, typically the reports that often you're going to be dealing with a lot will be those financial statements. So when you think about the reports, I would typically think about them in terms of the financial statement reports, and then all other reports basically supporting these financial statement reports, or giving more detail, adding to in some way the numbers and data within the financial statement reports. The standard two financial statement reports being the balance sheet and the income statement. Now note the reports will typically have like the default type of reports that are going to be in place. So if we go into here, we got basically the default type of reports that you can see here, and then we have some that have been modified or adjusted from the default reports up top. So that's going to be the kind of standard type of setup that you will have. You'll have these default reports, and then you can generate other reports from those default reports. Also, just note that there's integrations as well with the intelligence reporting down here. This is a really nice integration that could integrate between the Office 365 and Excel, mainly using Excel to integrate with the reports, and then that's a way that you can customize and save different reports as well. A lot more flexibility doing that with other softwares, but it can be a little bit intimidating to get that basically starting up and set up and get up and running and used to it. We're not going to be taking a lot of time looking at that integration, but just note that when we look at these standard reports, that you might say, well, you know, if I look at other kind of software, I have flexibility. I can change this or that in the system. Notice that flexibility is nice to have within the system, but it's still somewhat restricted because there's only so many options that you could put, like in the database program. So if you wanted, you know, a lot of flexibility, then the integration such as this, where you can integrate it with Excel and Microsoft 365, allows you to basically have a whole lot of flexibility in terms of the reporting. We're going to be concentrating here on the basic reports, and we might go into some of the intelligence reporting separately. That typically is going to be an add-on kind of plug-in feature that you're going to need to run, you know, to make those type of adjustments. So we then have the major two reports we've been bouncing back in on, and that's going to be the balance sheet report that we've seen in the past and the income statement report. So let's open those two up. We'll open up the balance sheet report here. We've seen it a few different times. Note we have the period on this side, and then whether we want to print the pages and show amounts with zero balances. I'm just going to simply open this up as we have seen a few times in the past. Now again, we can open multiple windows up at the same time. I do suggest doing this, the other major report being the income statement type of report. Let's open that up. And that way you really get an idea of what's going on as you go. I'm going to keep the periods here in the third period. I'm going to remove the zero balances. I don't want to see the zero balances and then say okay. So there's going to be our income statement for the current month and the year to date. Again, that's kind of like the default. If you want to make adjustments to that, you can make adjustments, but say if you wanted to take this data and put like a difference column in it or something like that, or change, you know, the format of things to percentages or anything like that, then it might be easier to do with basically that integration. You got your general options are going to be up top. So here's going to be the options we took a look at when we came in here. We've got the close button, the save button. We've got the printing options up top. I would suggest printing it and having available like a cute PDF printer, something that can print to a PDF file as well, just as standard, not just with Sage, but with anything. We've got the setup, hide, email. We could directly email. We can export it to Excel and a PDF file. These are going to be the typical kind of layouts and format of it. We also have the zoom in feature, as we've seen in the past. It can take us deeper into that data, into that information. So again, balance sheet and income statement, these are going to be the major financial statements. And so I don't even really think of them as reports, right? I think of them basically as, you know, the financial statements. And then everything else would be a report that's going to be feeding into that. So any other section that we go into in here, if we go into the accounts receivable, then you can have multiple different reports that will typically take that information that would kind of be on the balance sheet. Oftentimes we're thinking about the balance sheet report of accounts receivable and breaking that out into different ways, typically by customer. So typical reports here, if you're working in accounts receivable and collections or something like that, you can be using these reports a lot. That being the aged receivable, cash receipts journal, contact list, customer ledgers, customer lists. So notice anytime you think of customers or accounts receivable, you're typically thinking of accounts receivable, that account that's on the balance sheet. So you're thinking of balance sheet account. So if we go down here, then we have the invoice register, cost sold to customer. So now we got the cost of the sales to customer, because again, that's kind of in the AR cycle, on the sales cycle. The income statement accounts related to the expense of the selling of the inventory being the cost of goods sold. So we have the customer information, the items sold to customer. So now we're talking about sales side of things. And when we think about the sales side of things, that's still in the AR accounting or revenue cycle. And the sales side of things is going to be supporting basically an income statement account on the sales side. Prospect list, quote registers, sales back order, sales journal. So now we're talking about income statement accounts, right? These are going to be supporting documentation, supporting reports for the income statement accounts, sales, revenue, income. Sales order register, sales order report, and so on. Then we have the accounts payable. When you think about the accounts payable, you're basically thinking of reports that are supporting generally the accounts payable account, which again, balance sheet account. 1099 report. This is something in the U.S. we have to have the 1099s depending on certain people that are qualified for the 1099s that have to be issued. So we have that report, of course. The aged payable, similar to the aged receivable. This time, however, backing up the liability account of the payable account. Then we have the cash requirements, the check register, the items purchased from vendors. So we got the individual items that are purchased, purchase journal, purchase order register. Now, when you think about these purchases, they could be going into, you could be thinking about inventory type of reports, because the things that we might be purchasing or looking into might be the purchases of inventory. Then we have the vendor ledger, the vendor lists. So vendors, of course, being the people we pay to. So whenever you think of vendor, you're typically thinking about the payable, because you're thinking about the people that you're owing money to or buying stuff from. Then, of course, we have the payroll reports. So payroll reports supporting all the payroll accounts that we have, including the wages expense account, the payroll tax account, and then all the withholding accounts that we have to put in place. So we've got the current earnings report. And again, when I say they support those accounts, they support those parent accounts on the balance sheet, on the financial statements, the balance sheet and the income statement. So we got the current earnings report, we got the employee list, we've got the exception report, the payroll check register, the payroll journal, the payroll register, payroll tax report, and quarterly earnings, and so on and so forth, all related to the payroll, again supporting kind of the financial accounts. Then we have the general ledger. So if we go into the GL, the general ledger, you might see it whenever we kind of drill down on an account. That's basically a general ledger, a transaction detail type of report. We've got the account variance, we have the budget, we've got the cash account register, chart of accounts, and then the general journal, and then here's the actual general ledger. So the general ledger trial balance, that's going to give us our information. Typically, we're thinking more information by by date when we're thinking about the general ledger, by transaction and by date. Then, of course, we have the financial statements. These would probably, if they weren't, I don't know, I would kind of put the financial statements on top. I'm not exactly sure why. Maybe they're, I don't know. I would think of the financial statements on top of the reports, because, that's going to be the main report and everything else is going to be supporting it. But major reports here being, of course, balance sheet, income statement. You can make a whole lot of other kind of reports that are based on that kind of information if you so choose. Inventory reports, of course, supporting the inventory items on a balance sheet type of account. The other side of the inventory is typically the cost of goods sold. So when you think about the income statement side of things, cost of goods sold with relation to inventory. Assemblies, assembly list, component use list, cost of goods sold journal. So then the cost of goods sold again in here, because it's part of like the inventory cycle, the purchases cycle of inventory. It's going to be the sales side of things. Inventory adjustment journal, inventory profitability report, inventory reorder, inventory stock status, inventory unit, inventory valuation report, item costing report, and so on. And then we have jobs reports. If you're in a job costing type of system, that's kind of a specialty type of field, like a contractor or something like that, where you have longer types of jobs and you're tracking things to those particular jobs. Then we have the account reconciliation reports, things such as the bank reconciliation is going to be common types of reconciliation, and then company reports, and then here's that intelligence reporting. So the intelligence reporting is going to be a kind of an add-on feature. You typically have to pay more for that kind of integration, and this can help you to generate more reports and have more functionality with it, working closely with Excel so that you can use these reports to export to Excel. Now, no, you don't need this to just export to Excel. Like you can generate reports and export them to Excel, as we will see, without the intelligence reporting. However, if you want the intelligence reporting to kind of integrate that information and give you more functionality within the Excel report, or to integrate something so that it could work with Excel and memorize the report for the future, and so you don't have to recalculate the report again, then that's when the intelligence reporting is going to be good. So you do have the ability to take your standard reports, such as the financial statement up here, and print a balance sheet out and then export it to Excel and adjust it, add columns, add percentages, do whatever you want to do to it in Excel, of course. However, you can't really save that information as easily. So if you're thinking about, I want to set up a standard report and then be able to adjust that report in the future so that it can export to Excel and I don't have to recreate it each time, then you can use something like the intelligence reporting. So that's just a quick overview. We'll take a closer look at some of the reports in future presentations. That's it for now. Let's get out of here.